to the monthly market update. Here I have my good friend Randy Williams from TBF Mortgage and myself, Mary Bartos. We're going to jump into what's happening because as we move into the end of the year, it's really good to look back on what happened. So, Randy, what is our friend Bill McBride saying from Housing Analysts?
With the recent house price increases, some people are worried about new housing bubble, but the mortgage debt isn't a concern, and lending standards are much better now than during the bubble.
Yeah, I'm not hearing that as much, that people are worried about foreclosure, but they were worried. This summer, everyone was super worried. Now, election was a big thing in that.
Right.
But, I love this particular slide because it shows all of consumer debt. And it looks a little scary because mortgages are actually 45% of consumer debt for an astounding 13.17 trillion. That's a lot of money.
Yeah, it's a lot of money.
Right? But when you look at the equity, it is 35 trillion. So there is all this equity in these homes that people, you're not going to go into foreclosure if you have equity in your home, right? Now,
Correct.
if you've used it as a piggy bank like it was in 2008, that may happen, but that's not the case that we're seeing because of lending standards, right?
Right. The total debt is only a percentage of what it's actually worth. So that is a pretty healthy number, if you ask me.
Super healthy.
Right.
Now, what is ICE Mortgage and the Monitor report saying?
Equity growth has begun to moderate along with broader home prices in recent months, but that's still the largest volume of equity we've ever seen on record, adjusting for seasonality. The average homeowner now has $319,000 of equity in their home, of which $207 can be borrowed against while still maintaining 20% equity condition.
That's unbelievable.
It is. It's a lot of money.
It's unbelievable with that money
Right.
when you're thinking about it. So foreclosures, maybe not. So talk about what Rick Sharka is saying.
For a homeowner in the early stage of foreclosure, that equity helps them avoid foreclosure sale, either by leveraging the equity to pay down past due mortgage bills or by selling the property in order to protect the equity they'd otherwise lose at auction.
Right.
Right.
And still people, if you're watching this and you're like, I'm in this horrible situation, let us help you or let a professional help you because we can get you, moving on to the next place if you've got a hardship.
The last thing a bank wants to do is foreclose. There's so many options before you ever really get to that position.
Exactly. And, when you look at the serious mortgage delinquency that happened in 2008-9, it was huge. And as you come down, it looks like we're getting a little slight uptick, which the news is meant to terrify, not clarify. So what did Adam say?
In October 2024, the U.S. housing market experienced a slight uptick in foreclosure activity, with 30,784 properties filing for foreclosure, marking a 4% increase from the previous month, but an 11% decrease year over year. This nuanced trend shows foreclosure levels remain relatively low despite 1 month rise.
Right. Exactly. And when you look at that compared, Randy, to when the moratorium was happening in, 2021, 22, if the news gets a hold of that, it looks like it's significantly more. But when you compare it against, the last regular market, we're still less.
Or the last 20 years, which is the most important thing for us, right? I mean, we're
Right.
we're very low compared to the last 20 years.
Exactly.
Right.
So, Randy, because we had a slower summer across the nation, right? We've had, in my perspective, the election effect. Homes didn't sell. And so, if you're sitting on your home on the market and it hasn't sold, you're not alone. Days on market have risen nationwide in 24 from 58, which doesn't seem like a lot of days on market compared to some of our days, from 50 in 23. So increase in days on market. And then you're looking also at inventory rising, and that's gone up since, of course, 21, 22, and 23. So we've increased inventory, which, by the way, is a good thing because you don't have to put an offer on like immediately if you're looking to buy.
Right.
And then if you look at existing home sales are down. Now, in the month of November, they ticked back up, not just in our area, but across the nation. So when you look at that, days on market up, inventory up, sales down, it equals home doesn't sell.
Right. Again, a couple of factors there. Interest rates are a little higher than we're used to.
Right.
Most recently. An election does matter. It simply does. People do get a little freeze factor when the election happens. I expect this thing to bounce back. Well, it already is.
Yeah, totally. Now, but if you if your home didn't sell or you find yourself where it's going to come off the market, you really have 4 choices. 1, relist with your current agent. See how that's going. Did they communicate? Is the online presence sharp and clear? Is it up to someone's standards, yours specifically? How did that all work? Or, because there are great agents, that home stayed on the market. Was it a price? Did you want to go high and the agent said no and we couldn't come to a term? All those things happen when you've got it on the market. The second thing you can do is relist with a new agent. Again, you're going to interview for that very important job and you're going to make sure that all those things we just talked about are in line. The third is take it off the market. Now, right now in our high season, not something I would recommend taking it off. If you get out of season, good idea, but not right now. And then the fourth and last choice is maybe listed by yourself for sale by owner. So let's kind of blow that out with the for sale by owner. Randy, can you believe it that 90% of sellers used the assistant of a real estate agent to sell their home?
I think that's been historically about what the number always is. 9 out of 10 successful sales are going to be with the use of an agent.
Right.
Right.
And NAR just said that and only 6% were for sale by owner.
Correct.
Right. So when you look at that, of all the homes that have sold, the for sale by owners have decreased significantly in 2024 at the high when they were 21% in 1981. Wow. I graduated college in I went into college in 1981.
I'm not going to tell you how old I was.
I know you were a baby. You weren't even born. Whatever.
Yeah, I was.
Okay. All right.
I was around.
I was coming out of high school.
And I was paying
college.
attention to for sale by owners too.
I bet you were. Yeah. So the other thing that's kind of interesting is where did a for sale by owner find their buyer?
Yeah.
Right. So if 6%, we just heard that statistic, for sale by owner, what's the major place where they find it?
Yeah, they know them. I mean, look, where do for sale by owners work? If you live in an area where there's no competition, okay, maybe.
Right.
Are you on a farm? Are you out in the middle of nowhere? Do you know all of your neighbors? Like in that sort of scenario, maybe it'll work. But if you're, what we would call, your regular residential real estate agent, that number is even further down. Yeah.
And for 38% of all FSBO sellers, for sale by owner, sorry if I got a little lingo going on, the main reason they decided or that they sold was because they had that relative friend or neighbor.
Yep.
Right. Mm-hmm. So that's huge. Most important reason for selling their home as a for sale by owner. They knew their neighbor. They knew somebody. Yep. What was the number 2? Yeah,
they don't want to pay commission. That's the age-old adage. We've heard that forever. They don't have enough money to pay commission, or they don't want to pay it.
Right. They think that they can do it better. You might think you can do it better if you've got experience in that. And you've done 20 of these, rock on. I've got clients out there that have, and they're amazing. Right. But the majority of people haven't. And so what happens? So, 5 most difficult tasks for a for sale by owner when they sell themselves is
getting the price right, 17%, selling within the length of a time planned, 13%, understanding the paperwork. I mean, obviously the legalities of selling a home are not something you should overlook. Preparing or fixing the home for sale, 9%. Having enough time to devote to all the aspects of a sale, being available to show the property, keeping it in shape, like all of those things.
And, I find that it's only 5% because let me tell you, if you work a job, the only place you're getting them is for maybe open houses. And who's answering all those calls and talking to all the buyers?
Mary, darn well, crazy. If you list your house for sale by owner, you're going to get 100 calls in the first week. 99 of them are going to be who?
Unfortunately, they're going to be agents.
Yeah.
Calling to see what your house is about and if they can sell it for you.
Yeah.
So let's look ahead in 2025. We'll go forward. So what is Rick Sharga saying from Patrick Company, CJ Patrick?
I don't expect to see a meaningful increase in the supply of existing homes for sale until mortgage rates are back down in the low 5 range. I agree with that 100%.
Right. Yeah. So, I love this chart, Randy, because it's mortgage rate projections. We would love to see a 5% for next year. Fingers crossed. Yeah.
me too. Yeah, absolutely.
But they're talking more about it being, at the end of 25, maybe a low 6, right?
I think with recent Fed cuts, I think today they're meeting and we'll hear an announcement tomorrow, expecting another cut. Those things are eventually going to affect mortgage rates, credit card rates, car loans, things like that. It will eventually get there. So if they stop cutting, this is probably where we'll be. If they decide to continue to cut through these meetings, I hope we'll get a little bit lower.
Well, they do say a lot of things happen in that first year of when we have a new president go in.
Yeah.
So one of those is mortgage rates.
Yeah.
The other is going to be sales. It looks pretty flat from where it is right now for what they're projecting in 2025. But what's Freddie Mac saying?
Lower mortgage rates are expected to boost the housing market, but the lift will be modest given the continued tightness in the existing inventory and homebuyers staying on the sidelines expecting further rate declines. I do hear this a lot.
Yeah.
And we have to have that conversation a lot. Like, you can't sit there and wait. You honestly can't. You're going to get hurt.
Yeah. One way or another.
Yeah.
Now, one of the ways is when the money was going up so significantly, the price of the homes, if you waited a minute, you were kind of boxed out from purchasing. I don't know that we're going to see that because right now across how many analysts do we have here? A bunch. I should have counted them before. Average of 16.
Yep.
16 analysts. The average is about 3%. Only one is Moody's is saying it's going to go down by, 0.4%, which is less than 1. And we have a bullish is AEI Housing that's saying prices will go up by 5.5. So it's kind of a range in there, but the average of that is 3. I think that's fantastic. Again, when we start to look at, okay, now we were in a trough in 2024 of the lowest number of homes sold in quite some time. I want to say it's 35 years. Don't quote me on that. So that was 4.6 million. And what they're anticipating for 2025 is up by 500,000, which is 5.1 million. And that is resale and new construction, that combination across the nation. So when we start to see that happen and we are going up only from here and we know we're into a first year of a new president, which always helps sales, right? It always helps price go up and it always helps interest rates go down. I think we're in a good position for someone thinking about buying.
The economic numbers have all been pretty good. The one outstanding thing is always going to be inflation, and mortgage rates are tied directly to them. If we can continue to push inflation down, you're right. A new administration swept with the House, the Senate, and the presidency. That's typically going to be good to get something done, right? And I think as consumers, we've been, even though the economy has been pretty good and unemployment's below, things like that, it just didn't feel good.
Right.
So a new, fresh breath of air or whatever we have, that tends to bode well for house sales and mortgage rates.
I love that you said that because what we saw this summer was we were still, yes, we were selling houses. We weren't at zero with a large team like ours, but it was people were struggling to make those decisions. And almost immediately after the election, it was incredible.
You got clarity. I mean, that's all everybody needs, right? Like that's what it is. Because now we know, what we're looking for, at least for the next 4 years.
Exactly.
Yeah.
So Odetta Cushy, what's she saying?
Looking ahead to 2025, my baseline expectation is that single family home construction is poised to steadily increase, bolstered by modest declines in financing costs for builders and buyers by the scarcity of existing homes due to mortgage rate lock-in effect. Still a lot of people out there with low rates, and that's real. But,
let's go back. We didn't pull it on these slides, but from a previous session, we talked about a couple of times, 78% of people that bought during COVID are dissatisfied. And a huge number of those had an interest rate with a 3 in the first digit. But if you're dissatisfied, does it really matter what your interest rate is? Because there might be other products to get you to buy it down for a short amount of time. You have things to talk about, right?
Yeah, listen, I mean, we've been in the industry a very long time. That was a interesting time for us. It was not normal. Okay. Right. It was not a very fun time for a lot of people that didn't have, great offers. People that just had good jobs, saved up a little bit of money, done everything right, were trying to buy a house. Like that market was not good for those people. It was good for the people that can afford to go $100,000 over asking price.
And all that's cash, who it was good. And get rid of all your inspections.
Right.
And they bought homes that they probably didn't know they bought.
Right. So I don't think we're looking to go back to there, but maybe just a little bit easing up on some financing costs, and it'll help a lot.
Love that. So let's talk about our local market. It's interesting. The current market with months of inventory is sitting around over 8. We're probably at 8.2. So we're in a buyer's market, which isn't a horrible thing. Months of inventory, as you can see by this chart, Naples, overall Naples market is 8.2. The highest one we have on this chart is 8.8 months of inventory on Marco Island. And it's below 8 in both the Cape and Fort Myers. When I look at days on market, the median and number of days, again, we're looking at the highest is Marco Island with 95 days on the market. And we're seeing a lot more of that. And again, this is median with, 57 next in Naples, 53 in Cape, and 56 days on the market. So if you're going over that, more than likely you don't have great exposure or your price is too high. One of those two things.
I was just going to say, hire a great agent, proven marketing strategy, price it correctly. You'll cut that in half.
Exactly. You'll be under those days on market.
Yeah.
Homes for sale, we're seeing an uptick. Randy, I think one of the things that for me, normally our highest months are October, January, and March for when we have the most, we're seeing the rise in inventory. We had a storm in October, and we had an election. So that all pushed to November and probably December. I'll be anxious to see what the December numbers are, but that's for November. Everything has an uptick. From a year ago, you can see by these percentages how much higher it is. Now, here's the exciting thing. Pending homes. Every single market, we saw an increase in pending homes in the month of November from the previous several months. So I'm excited about what we saw after the election. I don't know, Randy, if you're looking to buy or sell right now in Southwest Florida, I think we're positioned for a great season. And we're seeing it now. I mean, it's crazy. We sold 2 homes last week in a week. We haven't seen that in quite some time. They were well priced. They were beautiful homes. They had a great marketing strategy behind it, but they were fast in their sale.
Hey, a couple things are always going to be true. The weather's great. People are always going to like to live here. And like I said, it's a great place to live. So all of the anxiety that we had over last year is kind of behind us, and looking forward to some positive months coming ahead.
I'm with you 1,000%.
Yeah.
So if you're looking to buy or sell, we'd love to help you. Again, Randy Williams from TBF Mortgage and Mary Bartos from the Bartos Group of Premier Plus Realty. And we know who you work with does matter. And we at the Bartos Group and TBF look forward to helping you.